Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Devina Khanna and you're watching Indian Open. Let's go straight to the headlines. Prime Minister Narendra Modi makes a pitch to global investors at the Bloomberg Global Business Forum, says corporate tax rate cuts are just one of the many reforms his government will undertake to help improve investment climate. The Prime Minister reduces the strength of his economic advisory panel from 6 to 4. Sajid Chinoy is appointed part-time member. Donald Trump asked the White House to release the transcript of his conversation with the Ukrainian president after the Democrats initiate impeachment proceedings. State-run oil marketing companies scramble to find alternative sources of gas after Saudi Aramco indicates a deferment in crude supply at least in the first few days of October. All right, let's take a look at the trade setup for today and how we've set up in tandem with the rest of the globe. So starting off, obviously, Donald Trump's comments to reporters in New York suggesting that a deal with China could be on the table sooner than anticipated, and that's something that's kept the markets a bit more buoyant. You've got about 0.5% plus for the S&P 500. Dow Jones trades with gains of about 0.6%, and then you have Nasdaq too, which traded with gains of almost 1%. Coming down to the European markets, and the FTSE CAC and DAX didn't do all that well in yesterday's session. They ended with losses. Marginal cuts for FTSE 100, CAC down by about 0.8%, followed by DAX, which was down closer to about 0.5% plus. Asian markets this morning, you've got some green on the screen. Marginal gains for Nikkei 225, which is up about 0.25%. China is trading with gains of about 0.2%, and Shanghai 100 points on the upside. Trickling it down to the SGX Nifty, which too has a positive start, about 25 odd points on the SGX. That's indicating probably what our start could look like this morning as we open up for trade. Coming back to Qs, remember we've spoken about how there have been comments made by President Trump with regards to a deal with China that could actually land up coming about much sooner than you think. That those were his comments to reporters in New York, and this actually comes in one day after the UN summit, where he actually spoke about him not being ready to do a deal with China if it's going to be a bad deal for the US. So he said it has to be a fair deal, and then only they'll go ahead with it. And the next day he says that you could expect a deal sooner rather than later. Aside from that, watch out for crude oil prices as well. Brent crude prices have come off steadily. About $62 per barrel is what you've got. The U.S. crude inventories have risen to 2.4 million barrels last week. That's the week ended September 20th, as per the data released by EIA. Aside from that as well, developments from Saudi Aramco is something that will weigh down on prices for Brent crude as well. So watch out for all of those factors. Aside from that, for our markets and what we did in yesterday's session, we saw a sharp correction on the benchmark indices. The Nifty 50 looked weak by closer to 1.5%. You had weakness in the Nifty Bank as well. This brings us down, brings us to levels where the downside gap now starts to get threatened. 11,380 to 11,350. This was the downside gap of the 23rd of September. That was Monday's downside gap that we've seen. So that area could be a pressure point, and you could see some build-up out there as well. Aside from that, we've got the futures and options monthly expiry that takes place today. So it's going to be a factor of volatility in the last half an hour to watch out for. Rollovers have picked up. We'll see how they pick up further in today's session. 56% in terms of the Nifty 50 rollovers, and for the Bank Nifty as well, rollovers are slightly on the lower side, closer to 41.83% in terms of the Nifty Bank rollovers. On the options side, you are starting to look at the build-up for the October 2nd expiry as well, which goes into next week. So you're going to keep a track of how the positions play out there. For the puts, 11,000 seems to hold the maximum amount of open interest, while for the call side, at least in the near term, closer to 11,600 odd is where you've got the open interest building up. Coming down to the fund activity in yesterday's session, FIIs were sellers. They sold out closer to 342 odd crores. For a 2% dip, that's not a relatively large number. But remember, they haven't really been buying in a big way as well. Just in the futures and options space, on the day that the markets went up 5%, they bought closer to about closer to about 2.5 to 3,000 odd crores, but that's more, a short-term position that you're looking at. DIIs sold out of 762 odd crores in the session yesterday. Coming down to individual stocks then, and what you need to keep an eye out on. So we'll start off first with Sterlite Technologies. We'll have the management joining us later on in the show. The company has signed a pact to acquire 100% stake in Impact Data Solutions for an enterprise value of closer to 106 odd crores. 80% of the stake has been acquired, and the remaining will be acquired over the next few years, so 20%. But remember, this is a small acquisition, so may not have that much of an impact on the financials. I think closer to 1.5% with what we've been understanding from the various brokerage reports that have covered this particular news. GSK Pharma, so they are to suspend release, distribution and supply of ranitidine in all forms to all markets. Remember, yesterday we spoke about this with Darshan, and the impact for GSK may not be all that much. We spoke about how the impact was for Aurobindo, but for GSK maybe not all that much. Cipla, again from the pharma space, is in focus. They are launching, they've already launched daptomycin for injections. The market size of this is closer to about $606 million, so can see a slight bit of a positive there. Varun Beverages, we've got promoters, they've sold their stake. RJ Corp sold 1.48% stake at a price of about 630 rupees per share. Remember, just the day before that, CLSA had put out a note on Varun Beverages. I think their price target was somewhere closer to 860 on the stock. The stock's trading closer to 624 right now. And talking about CLSA, they've cut their target price on Z Entertainment, though they've maintained their buy rating. They've cut the target price to about 450 from the earlier target price of 515. They say ad slowdown worse than 2009. However, subscription growth to continue, obviously, and the corporate tax cuts that have been seen could be the additional kicker for Z in the near term at least. Remember, yesterday's session was also important because they got the deadline from the lenders. Z yesterday closed with cuts of about 2%. All right, on First Word today, Nifty trades at a premium, but not most of its constituents. Yash Upadhyay explains this discrepancy. Debutants have fared better than their older peers in the stock market this year. Darshan Mehta will join us with that. All stock derivatives will be settled physically starting October series. Navneet Saluja D'Souza will tell us what these changes mean. And the government has reinstituted the Prime Minister's Economic Advisory Council. Nikunj Johri will bring us that. And we get you Prime Minister Narendra Modi's pitch to foreign investors at the Bloomberg Global Business Forum. All right, despite the volatility witnessed this year, Indian equity benchmarks are trading at a premium to its long-term averages. But the performance of the index constituents tell another tale. Yash Upadhyay is standing by with that story. Yash.
Good morning, Good morning, Devina. So we've been talking about how the index for the last year and a half has been managed on account of the moves that we've seen for some of the index heavyweights. And the same holds true when it comes to the Nifty valuation as well. Relative to most of its Asian as well as global peers, India continues to trade at a premium. And that has been something that has been discussed widely, despite of the fact that we've seen the kind of rout in the broader markets as well. So if you take a look at the 12-month forward price to earnings multiple for Nifty, that stands at almost about 18 times versus its 10-year historical average of 15 times. So that means that the Nifty is trading at a hefty premium of almost 16% to its long-term historical average. However, if you take a look at the individual constituents and almost two-thirds of the Nifty 50 stocks, they are trading at a discount. So 37 out of the 50 Nifty stocks are trading below their historical 10-year long-term average valuations. One is flat, while only 12 stocks, and largely they are from the FMCG space, they are trading at a premium. Essentially, what we've done is that we've looked at, we've put all of these 50 stocks into three buckets. X financials would be in the price to earnings multiple, financials would be in the price to book, and the two telecom stocks and Ultratech Cement, they fall in the EV to EBITDA valuation parameter. The reason for this big valuation premium that the Nifty has is mainly on account of the 5 index heavyweight stocks, the HDFC Twins, Reliance, SBI and ICICI Bank, and these are the names which continue to trade at a premium and continue to do well, pushing the Nifty higher as well as the valuation parameter. Now coming to the individual stocks, and we'll start first with the stocks for which the price to earnings multiple suits well. And what stands out here is the fact that most of the FMCG names, they continue to trade at a premium, with one exception that we'll talk about later. So HUL, Asian Paints, Titan, Britannia and Reliance, they are the top 5 stocks in this list who continue to trade at a premium, while majority of the Nifty constituents, they trade at a discount. This is followed by the likes of Tata Motors, Tech Mahindra, TCS, Hero MotoCorp, largely the autos as well as the IT pack as well. Next on the list is basically your metal names as well. So there is the likes of Vedanta, Tata Steel, Hindalco, the utility names as well, with Power Grid, NTPC. ITC is one name that I was referring to from the FMCG space, which is the only one in the Nifty which is trading at a discount. So it's down almost 36% to its 10-year historical average. On the other hand, also most of the pharma counters, they are trading with steep cuts or at a steep discount to their long-term historical average. You can take a look at Cipla, Dr. Reddy's, Sun Pharma. They are down almost anywhere between 40 to 55% to their 10-year historical average. Grasim, ONGC, the oil marketing companies, they too have been beaten down significantly in this period. One of the key highlights that stand out over here is the fact that most of the FMCG names, while they are trading at a premium, are the only exceptions, while all of the other sectors like the metal, IT, pharma, OMCs, they remain in a discount, but the leaders in those packs, they trade at a premium. So Reliance from the oil marketing companies is the only one that is trading at a premium. So that is something that the leaders are doing very well in their respective sectors. Moving on to the financial space, and again, most of these names are trading at a discount compared to their long-term historical average. So we are using the price to book multiple for financials over here, and there are the exception of Bajaj Finserv, ICICI Bank and Kotak Bank, which are trading at a slight bit of a premium. But take a look at the likes of Axis Bank, HDFC Bank, IndusInd Bank, Bajaj Finance. These are large banks with very healthy balance sheet as well. There are no as such corporate governance issues or asset quality issues. It is generally the slowing economy and concerns with respect to lending going forward, as they are directly linked to the economy. So macroeconomic concerns is the reason why we are seeing this. The last two names, Indiabulls Housing Finance and Yes Bank, well, we've known quite a lot about the concerns with respect to these two stocks. So that is the reason why they trade at such a steep discount to their long-term averages. And the last bucket is the telecom and Ultratech Cement, which is the only cement name in this pack, and we're using the EV, the estimated EV to estimated EBITDA for this parameter. And only Bharti Airtel is trading at a premium, but again, that is a minute 0.6% premium. The other two trade at sharp cuts. So this is how the overall valuation pack remains. There is this dichotomy: while the Nifty is trading at a premium, 2/3 of the Nifty constituents, they continue to trade at a steep discount.
All right, that again points to a bit of polarization that some of the top heavyweights on the index have. Yash, thanks very much for taking out the time. That's an interesting takeaway in terms of the valuations on the index. But moving on, one segment that has defied the negative sentiment is the new listings. There were 14 IPOs launched in the past year, and most of them have delivered stellar returns. Darshan Mehta, he's standing by to tell us about them. Just a few off the top: Metropolis, Polycab, India Mart, India Mesh, really good returns.
Yeah, so basically the reason why we're doing this is, if you're looking at the BSE 500 and if you sort them, what they've done this year, the top at least 4 or 5 are the recent IPOs, and they keep on hitting new highs. So it's not a 52-week high because they've just listed, but nevertheless they are gaining traction. So that's why this is why we did it. Now, if you take a look at the IPOs that came in, and we've taken a 1-year horizon. So for the past 12 months, whichever IPO came in, there were 14 IPOs that came in, and only 2 of them have given negative returns. So most of them have given good return. Avas Financials is up almost, Avas and India Mart have almost doubled from the issue price. Neogen Chemicals, Garden Reach has been doing extremely well. Metropolis has done well. It's up almost 50% since its listing price. The others include Affle. Affle yesterday did extremely well. There was Office Embassy Park. So most of these IPOs did well. What didn't do well were 2 IPOs. One of them was MSTC Limited, which is a government organization, and Sterling and Wilson Solar, which is a Shapoorji Pallonji Group company that that didn't do well. They didn't even get good subscription. So we'll talk about some of them. Avas Financials was up 93%. It's not cheap by any chance. It's trading at 5 to 5.2 times on an FY20 P2B. But here money is being given because they did not take any high risk realty financing. So that is something that the market, while the other NBFCs and banks fell because of the lending to the NBFC, to the real estate sector, there was avoidance here. ALM mismatch is clearly missing, and the AUM for FY19 grew at almost 46%. So financially also they are extremely strong. India Mart is another counter which has rallied significantly, almost doubling from this thing. It's India's largest online B2B platform. There is high entry barrier. They work at a negative working capital. They have the pricing power. So a lot of these companies are leveraging the online presence. So India Mart has done well in trade. Neogen Chemicals is another one which has done well. They specialized business with very high entry barriers, and they plan to double organic and inorganic chemical capacity. So it's a moat in which they are working. So that is doing well. Garden Reach is another one. Order book is extremely strong. The profit growth was strong. The dividend growth was also very, very strong. And recently, Garden Reach again with the Mazgaon Docks IPO coming in very, very soon, there will be a rub-off effect here. Metropolis is the other one. Asset-light model. They have shifted their model to an asset-light business portfolio. They are growing via the franchisee model. They have very strong presence in the west and southern India, and they're taking market share from the unorganized segment. And finally, the two stocks that didn't do well, one of them was MSTC. The financials were extremely poor. Revenue was down, profit was down, and slowdown in the trading business hurt the financial. And secondly was Sterling and Wilson. The demand was only muted. They were subscribed 0.8 times. The order book is very weak, and that is why the visibility is not coming in, and that's why it's down almost close to 20% from its issue price.
All right, Darshan, thanks very much for that. It's really interesting to see how within this period itself, when we have been seeing the market struggling the way it has, the rub-off effect does not happen in a negative light. And some of these newer listings, they've got the appetite, the market has got the appetite for these newer listings, and you've seen how each of them has been doing. And particularly a surprise story as India Mart, India Mesh, which has been one of the latest listings, and it's almost doubled from its issue price. Moving on. Starting Friday, all stock derivatives will be settled physically. The market regulator introduced physical settlement in a phased manner from April, and by October, the entire market will have shifted to the new regime. SEBI essentially wants to curb speculation and limit volatility by mandating delivery of shares. Namneet Saluja D'Souza is here to explain what these changes mean and why. Namneet.
Well, Davina, starting tomorrow, as you rightly mentioned, all the stocks which are there in the derivatives market will be moving into a physical settlement. And remember, as of now, there are 161 stocks which are already there in the futures and options market, out of which 116 are already there for physical settlement. And of course, 12 stocks will be coming out now, starting October series. So we'll have 149 stocks starting October series in the futures and options market, which will be physically settled. So why physical settlement, and how was the settlement done so far? So till now, both index derivatives and stock derivatives were cash settled, and starting tomorrow, we've already actually had 116 stocks which are there in physical settlement, but now the entire lot will be applicable for physical settlement. Remember, the delivery is only applicable if traders do not cover their positions till the expiry date. Let me start off with the stock futures, then how the physical settlement will take place. If you're long on a stock, let's say Reliance Industries, and if you do not close your position till the delivery date, you will have to take delivery of the share. So one lot is somewhere about 500 shares. You will have to take delivery. What does it mean? Derivatives is a leveraged trade. So you only pay a margin of the total contract value, which is somewhere about 6.5 lakh. But on the delivery date, you have to pay the entire sum of about 6.5 lakh shares. Let's look at the counterparty then. If you've shorted Reliance Industries, then what do you do if you've not covered your position till the expiry date? You have to give delivery then. And where do you give delivery from? If you don't have the stock in your demat account, if you have, fair enough, you can go ahead and give it to your broker and the exchange. But if you do not have, there's a penalty. You have to participate in auction. What does that mean? You have to buy at a higher price in order to give that delivery. So you'll end up making losses there. Let's move to the option side, which is a little more complicated than the stock futures side. So only in the money strikes, in the money positions are eligible for physical settlement. There is no delivery obligation if the position goes out of the money. I'll explain you that. Let's say you have to take delivery delivery for if you're long call or if you're put short position. And similarly, you have to give delivery if you're long put or you have call short position. I'll just give you an example to understand it simply. If you buy a 1300 call strike of Reliance, and let's say if Reliance expires, the underlying value of Reliance on the expiry date expires at 1310. So if you've bought a call, you have to take the delivery of one lot is 500 shares. You'll have to take the delivery. And similarly, if you had shorted this, you will have to provide delivery of the same. So that's how in the money will work. And if let's say if it expires below 1300, and if you've bought, then it's out of the money and you don't have to take delivery of the same. So this is how the physical settlement will take place in stock futures and index and in stock options. But there are some concerns also. There are issues related to physical settlement, especially in a market like India, which is not that evolved. And you'll be surprised to know, by the way, the single stock futures market is one of the biggest market in India, because globally people usually use the platform of securities lending and borrowing platform. So short sellers, people who short, where do they provide the stock from if they don't have it in their demat account? As I mentioned, you have to participate in the auction process, and you land up making losses because you don't know at what price you'll get the stock. So you land up buying at a higher price. Now, there are instances you could be in the money, but the stock option is illiquid. Not every stock option right now in India is very, very liquid. So let's say if there is a momentum in the stock, you take a position and you don't cover it, you wait till the expiry. But till the expiry date, there is no liquidity. There's no counterparty to square off your position. So that's where you get stuck. And of course, default can happen at client level, because it's a derivative trade where you only pay margin, but when it comes to taking delivery, you have to pay the entire contract value. Probably retail investors in that case land up making some bit of a default. So what does all this mean? At least for retail clients, they are important in the futures and options market, because currently nearly 40% of the exposure in futures and options market are held under client category, where retail also feature. So exposure in derivatives market may go down for the retail clients. And second, I've been speaking to a lot of brokerages. They've highlighted that they're not allowing the retail traders in the expiry week to take any sort of fresh positions. And lastly, what are the reasons for physical settlement? Why is regulator making it mandatory? To curb speculative trading in India, and also to curb volatility, which we'll end up seeing on the expiry day, and of course to promote the securities and lending mechanism, which came way back, I think, in 2011, 2012, but it's still not picked up. And lastly, this is an important data point. If you look at the ratio of turnover of derivatives to cash in the last decade, look at that, how it's moved. In FY10, it was only about 4 times, but that has moved to about 30 times. And this ratio is also one of the highest globally that we've seen, which tells you there is a lot of trading which happens on the stock derivative side in India, Devina.
All right, so that's what you've got. I mean, you better be careful in the expiry week. Then you have to settle on a physical basis. So that's going to be something interesting. Remember, like Namit said, there are a majority of the stocks are already under this gamut. A few more will come by the end of the September series into the October series. But moving on, the government has reinstituted the Prime Minister's Economic Advisory Council. The officials have been appointed for a two-year term, and while the chairman and secretary remain the same, the number of members have been reduced from 6 to 4. Nikon Johri has more details on this.
The government has reconstituted Prime Minister's Economic Advisory Council for a period of 2 years with effect from September 26, 2019. Mr. Bibek Devroy continues to be chairman of the PMEAC, and Ratan Batal, who is the current advisor at Niti Aayog, continues to be the member secretary of the Prime Minister's Economic Advisory Council. The number of part-time members have been cut to 2 from 4 members earlier, and Mr. Ratan Roy and Shamika Ravi have been dropped as the part-time members of the Prime Minister's Economic Advisory Council. Ashima Goel continues to be a part-time member of the PMEAC, and there's been a new member inducted into the panel, Mr. Sajid Chinoy, who is the current Chief India Economist at JP Morgan.
All right. Prime Minister Modi used the Bloomberg Global Business Forum to make a strong pitch to foreign investors, calling them to come invest in India. Speaking to Bloomberg founder Michael Bloomberg, he also reiterated that corporate tax cut is just one of many such reforms that the government will continue to undertake in India. Listen.
आज भारत में एक ऐसी सरकार है जो बिजनेस वर्ल्ड का सम्मान करती है, वेल्थ क्रिएशन का सम्मान करती हैं। साथियों, आपकी जानकारी में होगा कि अभी कुछ दिन पहले ही हमने कॉरपोरेट टैक्स में भारी कमी करने का फैसला लिया है। ये निवेश के स्तर से बहुत क्रांतिकारी कदम है और इस फैसले के बाद मेरी बिजनेस वर्ल्ड में के जितने भी लोगों से बात हुई, जिनसे भी मुलाकात हुई, वो इसे बहुत ही ऐतिहासिक कदम मानते हैं। आज इस मंच से मैं कहना चाहता हूं कि ये तो अभी शुरुआत है, अभी लंबा समय आगे बाकी है। इस सफर में भारत के साथ पार्टनरशिप करने के लिए ये पूरे विश्व के बिजनेस वर्ल्ड के लिए सुनहरा मौका है, गोल्डन अपॉर्चुनिटी है। फ्रेंड्स, टुडे India is in a unique position where our rapid growth enables us to cater to diverse demand. Our people are rapidly defeating poverty, moving up the economic ladder with increasing purchasing power. Thus, if you want to invest in a market where there is a scale, come to India. Our middle class is a huge segment of people who are aspirational and has a global outlook. Thus, if you want to invest in a market where the latest trend and futures are appreciated, come to India. Our youth are one of the largest users of the app economy. From food to transport and from movies to hyper-local delivery, startups are acing everything. Thus, if you want to invest in startups with a huge market, come to India. Our infrastructure creation is expanding at a fast pace, from highways to metros, from railways to ports, from airports to logistics. Each sector is seeing massive investment and tremendous potential. Thus, if you want to invest in one of the world's largest infrastructure ecosystem, come to India. We are rapidly modernizing our cities and equipping them with latest technology and citizen-friendly infrastructure. Thus, if you want to invest in urbanization, come to India. We have opened our defense sector like never before. If you want to make in India, for India, and for the world, come to India. We are building tens of millions of homes for the poor and middle classes. This is perhaps the largest housing efforts in the world. Thus, to invest in reality, come to India. साथियों, भारत में इंफ्रास्ट्रक्चर के विकास पर आज जितना हमारी सरकार निवेश कर रही है, उतना पहले कभी नहीं किया गया। अब हम आने वाले वर्षों में 100 लाख करोड़ यानी लगभग $1.3 ट्रिलियन आधुनिक इंफ्रास्ट्रक्चर पर खर्च करने जा रहे हैं। इसके अलावा भारत के सोशल इंफ्रास्ट्रक्चर पर भी लाखों करोड़ रुपए खर्च किए जा रहे हैं। भारत की ग्रोथ स्टोरी में क्वालिटेटिव और क्वांटिटेटिव लीप का रोड मैप जमीन पर उतर चुका है। अब भारत ने एक बड़ा लक्ष्य रखा है, देश को $5 ट्रिलियन की इकोनॉमी बनाने का। फ्रेंड्स, इस बड़े टारगेट को अचीव करने के लिए हमारे पास कैपेबिलिटी भी है, करेज भी है और कंडीशंस भी हमारे साथ है। आज भारत की ग्रोथ स्टोरी के 4 अहम फैक्टर हैं जो एक साथ दुनिया में मिलने वाली शायद ये रेयरेस्ट ऑफ द रेयर कॉम्बिनेशन है। ये 4 फैक्टर हैं: डेमोक्रेसी, डेमोग्राफी, डिमांड एंड डिसिसिवनेस।
All right, and on that note, we're going to slip into a short break, but there's lots more lined up on Indian Open. We discuss markets and macros with Pashupati Advani of Global Foray. Sterlite Tech is all set to make an acquisition. We speak to the group CEO, Anand Agarwal. And can the corporate tax cut take some burden off balance sheets of realtors? We will ask Atul Goyal of Brigade Enterprises. But after this break, a full tilt towards today's trade. Stay tuned.